Hello and welcome to the FF News Virtual Arena. I'm your host, Doug McKenzie, and on today's very special episode, we're going to be learning all about banking as a service in the Banking as a Service Barometer. And joining me today, I have three guests who are right at the heart of that topic. First up, we have Amit Dua from SunTec. Amit, how are you doing?
Very good, Doug. Very good morning. All good. Thank you.
Great to see you. Thank you so much. And Amit, could you tell our audience a bit about yourself and SunTec, please?
So I work as the president of the firm responsible for growth as well as the ecosystem that we have of our partners worldwide. SunTec is a world's #1 relationship-based pricing product, largely in banks. So we help the banks personalize their relationship and price them based on the value, volume, etc. Mostly large banks and a few telecom companies as well.
Absolutely amazing. Okay, well, you're perfectly placed for this convo, so thank you, Amit. Also joining us, we have Aruna Bhalla from TSB. Aruna, how are you doing?
Yes, good, thank you. Thanks for having me here. Excited to be part of the conversation.
Absolute pleasure. And Aruna, could you please tell our audience a bit about your work at TSB too?
Sure. So I head up partnerships and open banking at TSB, a key area for us at the moment as we start to really leverage our marketplace that we've just created and look to offer different products and services to our customers. So it's an exciting time to be at TSB and particularly in the partnerships team.
Absolutely amazing. Thank you so much, Aruna. And also we have Paul Harrald from Curve. Paul, how are you doing?
I'm slightly croaky, but I'm otherwise okay.
Well, as long as it's not COVID, I hope you're all right. And thank you for joining despite feeling poorly. Now, Paul, could you also tell our audience a bit about yourself and Curve?
Yeah, so I'm the CIO at Curve. I also run its lending businesses, and Curve is briefly described as an over-the-top banking app. It falls into the super app group of fintechs.
Absolutely amazing. I mean, I think we're going to be hearing a lot about how banking as a concept is going to be fragmented, brought back together, and how super app's going to play a huge role in that. So I'm really excited to hear your insights too, Paul. So guys, banking as a service, I think it's fair to say that it's almost become a buzzword, unfortunately. So let's lay it out. Let's set the scene. Paul, can you give our audience your introduction to banking as a service? What is the definition?
I can try. It is a slippery definition, but I mean, the one sentence version is that with modern technologies like APIs, the services that are typically provided by banks could be supplied by third parties using APIs. So the bank provides an API to a particular service. It might be, just for one example, it might be a lending product. And then third parties can indirectly supply that product via an API. So the banking is done by the bank, so the financial side of things is done by banks, and presumably they're quite good at that. But it's made available via technologies just like open banking, like APIs, to third parties to provide then on to their customers.
Perfect. I mean,
I think I said one sentence version. That wasn't quite.
I'll forgive you because I think it hit the nail on the head for me. And Aruna, I'd also like to get your perspective, because obviously Paul discussed the role of a bank, what might happen with banking as a service. Do you agree with that definition?
Yeah, I think it's definitely that, right? I think banking as a service allows us to develop new products and services, but also offer new products and services to our customers in half the time it usually takes. So we can, we hold the regulatory license and we kind of have to be compliant and manage all of that side of things. But what the fintechs and the partners can provide to us is that different choice for customers, and in half the time, and simply with simple technology like open banking and APIs.
Amazing. Okay, well, with that in place, then Amit, can I come to you and ask, as your perspective, kind of looking outside the financial world as well, why has it created so much hype in finance, particularly in banking? What's your perspective on this?
I think so. First of all, it's a business model. It's enabled by technology, right? So yeah, it's a business model which allows the third-party non-bank players to offer banking products and services, and it almost facilitates disintermediation of a bank, yet allows the bank to utilize their banking license or their banking charter fully and monetize them. Now, why is it created hype? Because the customers have got used to a frictionless and a holistic customer experience thanks to Amazon, Google, etc. and they increasingly expect that a similar experience is delivered in any journey that they take. So it could be a buy now, pay later sort of, embedded finance, but a retail journey. It could be what we've all got used to, like in Uber ride, so we set up our credit card once, it has gone into the substrate. So the banking product and service has gone into the substrate once. And after that, I don't even fuss about, how's the payment happening.
Yeah.
It happens in the Deliveroo food delivery experience. It's all frictionless. And that, therefore, I wouldn't say it's a hype. It's a genuine demand of customers wanting service providers to consolidate all this for them instead of the consumers doing it on their own. I think most of us would remember, you walk into a car showroom and you're actually offered a finance, but that's an offline separate experience. Well, this enables the customer journey to be holistic and integrated. So I think it's enjoying a boom.
Exciting. And I think that's a really good point. It's not just hype. It's a natural progression of things. People have come to get used to this level of service in every other vertical, every other sector. Why can't I get it from my bank? So Paul, before we go forward, I think there is another buzzword that sometimes infringes on banking as a services territory, and that's embedded finance. Can I get your perspective on that? And do you see a difference between the two? Is it a natural progression from one to the other, or are they two separate entities?
I think they are two separate entities. So first of all, I think it's very interesting, incidentally, that banks are willing to give up their B2C customer relationships. It's an interesting admission that some banks make, that what they're really good at is risk management and financial management. But honestly, managing the customer UI belongs in a different world. And I'm not sure banks need necessarily to give up on their relationship with customers. Let me come to your question. So embedded finance, I think, has been described very nicely. It's a frictionless experience. So if you take the example of taking an Uber ride, I don't choose PayPal. I don't have to choose PayPal. I don't have to register a card. I don't have to take a card on my wallet. That piece of finance has been embedded by virtue of the technologies that enable banking as a service. It's the same technologies, relatively modern technologies like APIs, things like that. So it's become embedded, and it can be embedded by third parties precisely because of technologies that support banking as a service. So Uber can embed payments because of things like banking as a service. However, the embedding creates, in my opinion, an interesting phenomenon, which is once my personal financial needs have become embedded, I sort of forget about them. I'm no longer comparison shopping. I'm not really aware of how much I've paid for this embedded finance. So the fact that something is embedded is distinct from banking as a service, because there's no necessity for third parties to embed things via banking as a service. It can be very overt.
Right.
And I draw the distinction because I think we're all aware that switching costs create inefficiencies in retail financial services. I mean, retail bank accounts being the obvious example, I think. And my slight concern with embedded finance is that I'm no longer aware of what I'm paying, nor if there's an alternative that's less expensive or provides a better service. So there is a distinction. I think banking as a service can be completely overt, whereas embedded finance is deliberately embedded in the name of reducing friction. But it does create this awkwardness, I think, or this potential inefficiency where consumers are no longer aware of who's providing what level of service at what cost.
Interesting. Now, that obviously, I mean, with that, I'm probably sounding over the top here, but that sounds like it could almost extinguish the need for a bank. But I don't think that's going to happen. I think we're going to see the role of a bank change dramatically and become something very exciting. And Aruna, I know you gave us some of that kind of insight to the new role of a bank in your definition of banking as a service. But could you tell us, what is the role, this new role of a bank, and how can banking as a service enable TSB to be number one?
Yeah, I think it's a good point. So for me, banking how banks can play their part is we've got access to the customers, we've got the brand reputation that we've built over the years, and we've got the regulatory licenses, which I think smaller fintechs, there's a lot of hard work and effort that needs to go into that to gain licenses. Banks can use that to their advantage and say, look, we've got something we can offer, we've got access to our customers, but we recognize our customers want choice, they want convenience. And I think the quicker banks can do that, so for example, TSB, we recognize we need to offer a marketplace or an ecosystem of goods and services to customers because they expect it now, and if they don't get it from us, they'll go elsewhere. So I think that's one of the main parts. I think what's really interesting to Paul's point around us losing a customer, I think that may not necessarily be the case because we've got a reputation and we've got a strong holding to carry us, but also there's nothing saying we can't create an ecosystem. So if I offered a loan, a TSB loan, well, actually, I would come to a fintech partner to find the car, to insure the car, to offer protection. And I think that's where we can all work together. And it's this ecosystem word that gets me really excited because that's where you can really start to make some groundbreaking kind of changes and decisions in how you offer things to customers. So we can continue to hold a relationship, but we're not stopping at just a loan. We recognize you want everything now on your doorstep, and that's how we can create that.
That's amazing because we've gone from a decade ago where it's talking about the fintechs taking over from the banks, and then this the changing nature now, rather than looking at competition, is cooperation, which when you're looking after people's money, I think that needs to be the aim of the game. So Amit, can we expand this ecosystem further that Aruna was talking about? What will that ecosystem style approach mean going forward for the banking sector?
So first of all, as we see it, there are three buckets of players emerging in the BaaS ecosystem. The banks themselves, and Gartner hype cycle last month, which talks about the fact that BaaS will become mainstream for large banks who are more than $1 billion in revenue. Gartner is predicting that more than 30% of them will start offering BaaS as a service in next 2 years.
Wow.
Now, that said, not everybody will meet their revenue goal for a variety of reasons, which I think we should cover here. It allows the banks to acquire customers at a lower cost of acquisition and push up their volumes, customer volumes, right? There's a second set of players, which are these fintechs or enablers who can use their technology and who can use customer insights to drive personalized and holistic customer experience. And eventually the customer who benefits from the fact that it'll have more choices, it'll have an integrated and holistic experience, etc. But what does it take for an ecosystem to flourish? Whether a BaaS ecosystem or any other ecosystem. Those are a few things, which is, one is every player in the ecosystem getting rewarded appropriately for its contribution. Are the SLAs being adhered to? Are the contracts between the partners being managed and monitored properly? Because the rubber meets the road, as they say, when a SLA default happens. There are murmurs that Goldman Sachs, who's a BaaS service provider for Apple credit card, for a couple of years now, and as of 2 days back, also announced for Savings Bank, there are murmurs that it's good to have a sexy Apple app on the mobile phone for the credit card and accept a dispute on a charge. But does Goldman Sachs have the experience at the back end to handle that chargeback, which requires a retail bank, and Goldman Sachs is not a retail bank. So there are murmurs that things are not great there. So what I'm trying to say is that every player in the ecosystem would need to work together, be rewarded by the ecosystem owner properly, measure their SLAs, what happens if their SLA default, and basically create a frictionless experience for a customer.
Now, that presents so many different challenges because obviously I think traditional banks like Goldman Sachs, hard to maneuver, then jumping into a whole brand new sector, like you said, retail banking. In this regard, obviously with the Apple Card, That is going to be a very interesting dynamic. Now, with that in mind, looking at these retail customers, Paul, I'd love to get your perspective on what are the actual use cases. I always love getting use cases out on the virtual arena. What are the actual use cases that customers are going to be seeing by leveraging banking as a service?
So first of all, I was very interested to hear Aruna talk about the opportunity for banks in developing ecosystems. So the way we've thought about this is, I think it is true that customers no longer necessarily want to be served by single institutions. They want choice. And of course, I think we can all agree that modern technology has enabled choice in financial services. The entry costs, even the regulatory entry costs, incidentally, are much lower, but the technology entry costs now are practically insignificant. So what comes along is this concept of an ecosystem that's served in the background by banking institutions. I think that one of the use cases that Curve wants to address is the tyranny of choice, which is, if it is relatively inexpensive now to enter retail financial services because you can use the regulatory permissions and the balance sheets and the other resources of banks, and the technology now is relatively inexpensive, then you have a plethora of fintechs available to you. And Curve was founded on the principle that one of the use cases is trying to make sense of this ecosystem, which is, oh my goodness, I really don't know how to search through all of the choices that are now available to me. So the use case that Curve wants to address is, we don't want to provide retail financial services at all. We just want to make them pleasantly accessible and comparable. So if you look at the core Curve product, which started in the payments world, we issue you with a piece of plastic. Well, it's actually not plastic, it's rather beautiful metal. But we issue you with a debit or a credit card. And in fact, it acts as any of your other cards. It sits over the top. So in that way, at least in the app, you can choose which of your underlying cards is really doing the hard work. We think that analogizes into things like insurance, foreign exchange, borrowing, or all of these other retail financial services. So the use case that the analogy of our use case is, you may want to stay in the same hotel in Boston. You may not want to search, because honestly, how would you? Until Booking.com comes along and it solves a problem you didn't think you had, which is you can now pick and choose and compare and things like that. So we see the ecosystem, we love it, incidentally. I love the competitiveness that it provides. Yeah. I also love the fact that banks get to do the thing that they're very good at, which is things like KYC, risk management, economies of scale from their balance sheet. It's really beautiful from a competitive point of view, but it does leave this residual need, which is, how do I make sense of this ecosystem, and how do I meaningfully search among the alternative providers in a single place? So the use case we're founded on is making sense of the ecosystem and allowing a pleasant way to navigate through it.
Amazing. And as someone that uses, for instance, Skyscanner quite a lot, bring that comparison into financial products, when people often just bank with the bank that they've inherited effectively from their parents, or when they were a student. I think that's going to make financial services products actually something people deliberate over, discuss, and that can only be a positive for the industry. And I think one thing we're also seeing, and Amit, if I could come to you one more time, you were talking about, Paul was bringing up the economies of scale there. Does this allow banks to also scale into other geographies? You were mentioning how Goldman went into a different segment, a different vertical, but are we going to start seeing, pretty tier 2 banks jumping around into other geographies?
Oh, absolutely. I think that's a brilliant point, because fundamentally, like Paul said, it allows the bank or forces the bank to focus on its core competency of risk management and the general ledger, etc., and therefore allows it to kind of strike better partnerships with other players across geographies who are better positioned to reach out to customers. Now, sure, maybe low margin business, but high volume, and overall ROE of the bank gets better. I mean, I can quote an example, which is a brilliant use case, for thousands of mobile money operators around the world in emerging markets like, Latin America or Africa or Philippines. And for years, they've offered are mobile wallets, really, if you think of it, right? Via embedded finance, these guys have the potential to be able to reach out to 1.2 billion people who are not fully banked or underbanked by now starting to offer, things which are beyond wallets, things like a small savings account, things like insurance, things like a micro investment eventually, because all this can be happening through the substrate in that mobile interaction. So certainly the access and reach and the volumes can go through the roof if the right partnerships are struck.
Amazing. And I love that financial inclusion element, because suddenly we're seeing even high-end products being scaled down so that early retail, for instance, investors, as we saw in 2020, can suddenly get access. And then as you mentioned, over in the Philippines, getting access to savings account. It is absolutely amazing. It's changing lives. Now, obviously, we can create these services, but it comes down to customer appetite. And I'm pretty sure most people walking down the street, if you said to them, what's BaaS about, they'd think of the fish. So Aruna, do you think that the success of banking as a service will come down to customer appetite for new services? How can we educate our, the consumers to say, hey, look, we've got all these brand new products?
Yeah, no, I think it absolutely comes down to that. But the appetite is there, right? I read a quote the other day that 67% of consumers now want a super app to consolidate all of their digital activities. That's huge. That's them recognizing I need access to this app that does everything for me. Yeah. And we've got the potential to do that. And to Amit's point, it is absolutely, on the banks to make sure that they are attractive for partners to work with them. TSB have spent the last couple of years really setting up the foundation so partners can actually partner with it. So we've got, slicker contracts in terms of how we get them onboarded. We've got, regular sessions with them to keep them engaged. We bring them into kind of right into the camp and speaking to kind of our key legal, risk and compliance officers, so they understand this is what you need. So having that in place makes it attractive. But then on the flip side, what we need partners to do is offer us compelling discounts or reasons for us to partner with them, because we have seen this explosion of fintechs come out and say we offer all of this sort of stuff, and sometimes banks can feel overwhelmed. Are we going for the right provider? Are we going for the right partner? So having that exclusive plug as to why should I go for partner A over partner B will make it very easier for us as we start to build out our marketplace and our choices to customers. It's easier to sell it back to the customer to say, we're giving you this because you bank with TSB, you can get 10% off this protection, this insurance, this loan. And I think that makes it really compelling. And then the sale's done right, that customer goes, I want to bank with TSB because I get access to this huge ecosystem, and they're really excited by that.
I think that's brilliant. Oh, sorry, Amit.
If I can just jump in and just compliment this comment. So typically what happens is, in a true two-sided network, so an ecosystem which eventually becomes two-sided. Take, for example, what Aruna is saying. Now, you'd ideally have an SME customer of TSB who, for example, is a home security equipment provider, also become a supplier to other customers within the TSB network. And moment the network effect kicks in, the cost of procuring a home security equipment for me as a customer from the TSB ecosystem will actually be lower than from buying it outside. That's exactly what she's saying. So essentially, when the network effect kicks in, and that's the true power of an ecosystem, that if you create, so if you join up together and it's frictionless, more value is created, and therefore driving the cost for the consumer. I think that's the true test of a successful ecosystem.
Yeah. I mean, hearing that bottom line being reduced in these times is going to be absolutely critical. And also going to Aruna's point, being able to offer up from a bank, being able to offer up various different services. I mean, I can almost imagine, Aruna, it's going to get to the point where if you bank with a certain bank, you could offer up coupons, for instance, at retail stores. And suddenly, if, for instance, TSB had that one retailer that everyone shops at, for instance, maybe Tesco, that would be incredible. Just by using your Tesco card, getting that reduction, that's going to be absolutely fascinating. So, Paul, you've already mentioned Curve as being this super app. could BaaS enable finance to actually become this disintermediary and disrupt every other vertical, from retail to clothing, shopping, all of it?
Well, I think the answer has to be yes, and it has to be the kind of debate that goes on inside Amazon and Google and all of these other institutions that have quite a lot of cash on their balance sheet, which is I think Amit's made a point that once you create network effects in ecosystems, then you have all kinds of leverage over institutions, and pricing leverage is just one of them, but there are many others. Another example of a similar effect would be conversion, which is if you look at the business model of Credit Karma or AccountScore or companies like that, they're selling, their business model appears to be B2C, which is I'll provide you with your credit score, but of course it's not. They're brokers of other people's loans, and the accuracy with which they can provide customers depends on the quantity and relevance of data. Now, if you're at the center of an ecosystem, you're awash with relevant data on what people may or may not want, and the suitability of those products for the people on one side of the marketplace. So yes, I love the idea of a financial services marketplace. It does not exist outside of Lloyd's, TSB and Aruna. Our goal is to create a marketplace in the same way. We want to motivate it by, on the one hand, providing customers with a way to make sense and search through the explosion of fintech choices. However, the data that we gather should make us attractive to fintech partners too, because they get more suitable customers. The network effect that we're describing here is nothing, it's a well-established model, I think. It's the similar model, it's the similar relationship Amazon has with merchants, it seems to me, although they provide fulfillment too. So it will put pressure on companies, I think, in the retail space because of the data availability and the link between the retail world and the financial world, which is payments. I'm quite sure that the large marketplaces look at the costs of processing payments and wonder why. What is actually being provided by the payments world to them that they could not do themselves?
Yeah.
So that nexus between the retail world and the financial world, which is payments, I don't know. It must be hotly discussed inside the Apples and the Amazons and the Samsungs of the world. I don't know that, by the way, but it must be. And it's an example of the kind of leverage that a financial ecosystem can place on the retail world and vice versa. Yeah.
You made a really good point there, and especially when you look at the changes, yes, payments being a revenue stream, going from suddenly now that it used to make one payment at an ATM every other day, now people are making microtransactions every other 30 minutes.
Wow.
And that revenue stream from payments has absolutely dried up.
And that tension, of course, spilled over a little bit publicly with Visa and Amazon, of course.
Yes.
I find that tension very interesting. We're all agreeing that it's technology that's enabling things like banking as a service and embedded finance. The best technologists in the world are not bankers, with all due respect. I think we have to agree that the Googles of the world are admittedly better technologists, and they have cash on their balance sheets. Yet we all know, or at least I think Aruna and I will know, it's not easy being a regulated bank. There's a lot to it, a lot of skill involved.
Yeah.
But I love to see how these tensions play out. I'm really looking forward to watching how those tensions play out. But the short answer to this question, tremendous leverage from the financial world over the retail world, but it also goes the other way.
It's a completely different paradigm. And I remember, a couple of years ago hearing that the tech giants were going to get into banking. They still haven't. So Aruna, is that a sign that they never will?
I think they recognise I hope they recognise the power of working together. It's that collaboration versus competition, right? If they are the experts in that field and we're the experts in being able to be compliant and regulatory and hold our license and protect our customers, it makes so much more value to work together. For us as well, from our perspective, we have to focus on new consumer duties coming out. That's relevant. What will make it easier for us if those tech partners, but also smaller fintechs, learn and understand what that means to us, because that makes it really attractive for us to go, yes, we'll work with you, and we'll open up this ecosystem to you, because we have got that to focus on, and we've got a lot of time is being spent on that. But I hope it is, that kind of collaboration piece where they realise the value in what a bank offers, their kind of expertise. We've realised what partners and tech offer us and their expertise. And I think if we work together, we can do great things.
Amazing. Yeah. Well, with that in mind then, if we look to the past then, and Amit, I'm coming to you with this question, Aruna's just brought up how that the future is very bright for banks because of this ecosystem approach. But if we, Amit, if we look to maybe 10 years ago, 5 years ago, financial institutions, traditional ones, I think it's fair to say have been a bit slow to adopt new digital strategies, hence why we're at this kind of new paradigm. Will banking as a service eliminate legacy systems forever?
Oh, my favorite question. In theory, banks can and could have used all the customer data for making personalized and relevant offers all these years. Now with open banking in place, with even the ecosystem combined. But due to legacy challenges in application architecture rigidities, I'd say, many banks have remained product-centric. So loans, deposits, credit cards, XYZ, instead of being client-centric, right? And not every large bank can assume that they can become an effective BaaS provider, because provision of banking as a service will need them to open up their APIs, modernize their traditional landscapes. I'll give you an example. If you are a BaaS provider as a bank, providing your services to a large retailer, there's no way you can offer products and services which are not bundled together, not build them as a full revenue stream, and instead, build them basis, individual product, because it doesn't capture the whole relationship. It actually, it is a basic fundamental construct of managing an ecosystem. And last but not the least, the data security and privacy, etc., etc. So there's quite a bit of it, and not every large bank can assume that it is easy to offer BaaS services, I'd say.
Yeah,
I'd like to add to that if I can, just to pick up on some points that I think, one of the other challenges, it isn't just technology, it's a cultural shift in a bank. Amit's touched on, we work in our product lines. That needs to change for us to be successful, right? And that's technology and culture. They go hand in hand. We've got to start recognizing that actually it's one product, it's an ecosystem, it's lots of different things, as opposed to I'm just going to be working in my loans team, I'm just going to be working in my savings team and my mortgages team. And that is also a challenge with the technology. But I think, banks should start to recognize that, and that will help. But it cannot just be technology is to blame. I think it's the culture side as well is so important.
If anything, knowing human nature, that could be the hardest part. But hopefully we will start seeing it change, because I think follow the money. If you start seeing other financial institutions offering up all these brilliant new products, that culture changes quite quickly. At least I hope. So thank you, Aruna. And also, Paul, to wrap up, do you agree with some of those challenges that Amit and Aruna have brought up?
I find this a really interesting point, which is what's so mysterious about software engineering, which means the banks of the world can't just become technology giants. Let's look at it that way around.
Yeah.
And I think when we talk about culture, it's really a very specific culture. So there's a very famous manifesto that was written that gave birth to the concept of agile software engineering. And it contains various principles, one of which is don't document things. It's a waste of time. Just get it done and ship it. And I'll give you that one example of the difference between the culture in a technology company and the culture in a bank. It's not that banks are not creative. By the way, it's nothing to do with hardware. You can run we have an expert with Amit, but you can run microservices on an AS5. It's not hardware. But just take that one embedded principle in the agile, which is documentation is a waste of time. Just fix it and move on. Fix it and move on. Provide value on fast cycles. Unfortunately, you simply cannot behave that way. You have operational risk, you have a duty of care, and all various other things inside banks. So there's one very specific difference between technology companies banking companies, and that is they do embrace the concept of agile, and agile does embrace the concept of ship it. And that's the main difference between banks and technology companies. Is it's very difficult not to adopt. You cannot, in fact, adopt agile techniques. So it's no fault, in my opinion. It doesn't reflect on the quality of engineers in banking, and it doesn't reflect on, you know, the supposed creative genius of technology companies. It really is a very specific element of culture, which is agile software engineering, that makes it very difficult to adopt the kind of open innovation style of the technology world.
And with that, I think we've got to leave it there. You know, to hear how behind it all, it's been the regulators that have protected people, obviously, but made innovation go at the pace it has. But I think we're going to start seeing, as the technology flourishes, that having a bit more of an open dialogue as people try to be competitive in the financial space, especially with what's going on in the global sphere. I've got to say a massive thank you to all three of you. It's been fascinating getting all your insights. I think, Amit, you brought up the fact that there are three main players in this ecosystem. And I think hopefully we've brought several of those here today. So a big thank you as well to our viewers. You can catch the rest of the series and much more over at ffnews.com. Of course, YouTube, but especially LinkedIn, where you'll see me in the comments. So a big thank you to Amit, Paul, and Aruna. Thank you, guys. I hope you've enjoyed yourself.
Very much. Thank you.
Cheers, guys. And
thank you very much.